So better late than never, I thought it was finally time to do the February portfolio update. So last month was pretty grim. It was down about £20,000 if you remember, and that video attracted a lot of attention, probably because it was a horrible month and people love to see big numbers like that. Well, this month is almost the polar opposite. It's been an absolutely fantastic month. Now I realise I'm about 2 weeks late posting this, but the data is as of the end of February. So I haven't included the last couple of weeks worth of data in this video. That will be in next month's update. Now if you're on the newsletter, you had a little sneak peek about what might be coming in this video about 2 weeks ago when I popped a little update in the newsletter. But for the rest of you, I thought it was finally time to share the numbers from February 2024. So hello, my name is Chaz. If you're new here, I go by the name of the RiskOnInvestor here on YouTube, and this channel is documenting my journey to building a £1 million investment portfolio. I'll leave links in the description to relevant places where you can find out more information about me and the journey that I'm on. And if you're a long-time viewer, just want to say welcome back. Now before we continue, I just want to clarify that I'm not a financial expert. This is purely my own journey being documented here on YouTube for you to follow along. And on this channel, I'll share some of my thoughts, things that I'm looking at, things that I'm interested in, and hopefully you'll find it interesting too. Now that does mean that nothing on this channel is financial advice. Anything that I do on this channel shouldn't be taken as advice, and if you do want to copy what I'm doing, it's completely at your own discretion and at your own risk. So with that out of the way, let's crack on to some numbers. Now if you've been following this channel for a while, you'll know that there's some underlying thesis to what I'm invested in and how I'm invested. So I just want to do a very quick run over of that again, just to make sure we're all up to speed before we jump in. So firstly, I think that we're pretty much at the peak of the rate hiking cycle. That means it's only really downhill from here. And as such, that means borrowing costs will be lower, and generally that means businesses can borrow to invest. It also means that all the money that we've currently got parked in US money market funds, which breached around 6 trillion this year, which is a crazy big number, will probably start to drain out as interest rates in the US are cut. And I think that money will probably find its home in the stock market. So that will mean there's a big net buyer of equities coming, and that's why I expect this year to be a pretty good year. Now if that's my underlying thesis, I want to find the assets that are going to run fastest and hardest. And in my opinion, that's the things furthest out on the risk curve, and in particular things like crypto. Now I know crypto is a bit of a Marmite thing, some people love it, some people hate it. I actually think a lot of the technology is really interesting, but the primary reason that I'm using it is just to make some money at the moment. So without further ado, let's jump into the numbers from my pension this month. Now there's two main components to my pension. Firstly, there's an old workplace pension that I have that has a couple of £1,000s in it. Unfortunately, that money is largely trapped in that pension account because I can only do transfers out every 3 years from that provider, and I've done a transfer out within that time. So that money is just sitting there, and that's invested in a global index fund, so nothing particularly exciting there. But the majority of my pension is self-managed in a SIP. That's currently with AJ Bell. Now, as I said, this is the RiskOnInvestor channel, and so the pension is the first place where I'm taking some risk with my money. And so whilst I would consider a global index fund fairly low risk, the majority of my pension is actually in a single stock, which is MicroStrategy. Now MicroStrategy is a software business, but the reason I'm interested in it is MicroStrategy holds a large number of Bitcoin. So that makes MicroStrategy a way for me to access some of the upside potential of Bitcoin, but within a tax-advantaged account here in the UK. Now this month, if you've been paying attention, Bitcoin has done really well, and that's been great for my portfolio, but what's been even better is that MicroStrategy has done even better. So MicroStrategy is often seen as a bit of a leveraged play on Bitcoin anyway, and that's because MicroStrategy can borrow money to buy Bitcoin, which a typical ETF or just buying the Bitcoin itself you can't do. Now if you recall last month's update, the main reason my portfolio dropped was because once the Bitcoin ETFs were launched, MicroStrategy snapped back to a 0% premium effectively. So MicroStrategy is currently trading at a premium to its holdings in its Bitcoin. Now, I'm a little bit concerned about it because it's overstretched by a long way in my opinion. The premium for the book value of MicroStrategy is now absolutely huge, which is probably going to stunt my returns in the future, but until I can find something better, I'm going to be sticking with it. So that's meant that this month, my pension holdings have increased from around £54,000 to £107,112.30. That's a 98.4% return this month, which is absolutely fantastic. Now long term, it would be great to be at the point where I can effectively just transfer my pension back to a global index fund, sit on it, and that in itself would get to £1 million by the time I retire. So just applying some crude maths to that, if we said it was to double every 10 years when it's in a global index fund, I've got about 3 doublings left before I can access that money in my retirement. That means that would need to be at least £125,000 in the pension pot to give me about £1 million in retirement. Now I'm so close to that, but I think I've still got further to run on this MicroStrategy play, so for now I'm going to stay invested. The next portion of my portfolio is my cash holdings. Now, these don't really make up an active part of the portfolio, but as I get towards that £1 million target, the cash section will grow a little bit, because I'll be looking to probably hold around 2 years worth of expenses in cash. And that's so that I can weather sudden downturns in the market and give the markets half a chance to recover before I need to start dipping into them again. Now the cash position can continue to drain this month. It's down about 37%, and that's a mixture of just day-to-day spending, and I've also been trying out a few sort of side ventures and business ventures, which I'll talk about in some future videos. Now the cash is actually a fairly inconsequential part of the portfolio now, and so I don't know whether I'll continue to mention it in future videos. I probably will for consistency's sake, but yeah, just so you can see, it's a small part. Now most of that cash is held in relatively high interest savings accounts, so the money is generally in accounts between 4.1 and 4.5% interest. The 4.5% account has about a 1-day lag on withdrawals, so not too bad again. So that means that I'm getting a half decent interest rate with still relatively easy access to that cash if I need it. Now the standout performing section of my portfolio this month is my stocks and shares ISA. So I hold my stocks and shares ISA with Trading 212. For those of you who are interested, Trading 212 is doing a great offer at the moment, where if you open an account with them and deposit £1, that's correct at the time of this video, you can win a free share worth up to £100 if you use someone's invite link. So if that's something that interests you, I'll leave my invite link down below. It's completely risk-free for you. Even if you don't want to use them as your account, you can sign up, get the free share, sell it, withdraw your money, no loss to you. Now you may recall in January after that dip, I started adding a leveraged position to my MicroStrategy play. Well, that's really played out well over the last month or so. And that's because MicroStrategy has regained some of its premium, but also Bitcoin has had a fantastic month. So that's been a really double whammy for me. Now, what my plan is to do with the leveraged position, and what I have been doing over the last month, is to sell into the rallies. Now, I'm not selling out of the position entirely, I'm just selling out the leveraged position into the unleveraged position to effectively kind of bank some of those gains. Now, the target is to hold about 25% of the portfolio in the leveraged position, and you'll see that I was way overweight in that last month, and that's come down to about the target position at this month. Now, the main benefit that I see of this is that in the past, Bitcoin has generally, when it's run really hard, has had 20 to 30% corrections semi-regularly. And so because MicroStrategy is a leveraged play on that, I'm expecting MicroStrategy to possibly even have sort of 50% corrections. And so that means when it has those corrections, I'll be selling out my unleveraged position back into my leveraged position, which hopefully then when there's a rebound should give me an even bigger boost on the rebound. Now, I haven't had a chance to buy any of the dips yet. There was a bit of a dip in the Bitcoin price after it hit all-time highs and dropped about 10%, but it didn't drop for long enough and far enough for me to start buying back in with the leveraged position. Now, there's been no contributions to the ISA this month, as there wasn't to the pension either, but even without the contributions, the stocks and shares ISA is up 204% this month, from £13,357 to £40,718. Now that's really, really impressive, especially because Bitcoin itself was only up about 45% in the last month, so I've managed to effectively quadruple that return. Now the final main part of the portfolio is the crypto section, and so whilst the rest of my portfolio is generally proxies or plays on crypto, this is the part of the portfolio that's just straight up holding the direct assets on-chain rather than in a taxable account. Now again, you may know if you've been around in previous videos, but my biggest crypto holding is in Ethereum. The Ethereum holding gives some diversification from the Bitcoin holding while still having massive exposure to the sector. It also allows me to do a few other things that you can't do directly with Bitcoin. For example, Ethereum can be staked. And for those of you who don't know, that's effectively earning an interest rate on the Ethereum itself. And that rate hovers between around 3.5 and 4.5%. Now by the time you're watching this, there might have also been what's known as the Denkun upgrade, which, without getting into too much of the technicalities, will reduce the fees for any additional networks building on top of Ethereum. So that means they can post data back to Ethereum, which Ethereum will then secure, and they can do that for a much cheaper rate than they've been able to do it in the past. Now there are future upgrades coming that will make this even cheaper, but for now it's expected to be about a 10x decrease in costs. If that's something you're interested in, I talk a lot more about it generally on my newsletter in the crypto section of my newsletter, just because it's something I keep an eye on because I've got a big investment in it. Now one final other caveat, just so you're aware, is the numbers that I present for the crypto section of the portfolio include a 20% discount already baked in. And the reason I bake that in is just as a crude proxy for now for any capital gains tax liability in the future. So 20% is the higher rate capital gains here in the UK if you aren't familiar. And so the crypto holdings this month have gone from around 49,000 to around 69,000, so just over a 40% increase. So as you can see, it's been an absolutely incredible month for the portfolio. To be honest, this is probably the biggest up month the portfolio may ever see in its total life. And that's because even once I reach the £1 million goal, the portfolio would have to have around a 10% increase in a single month to match what's happened this month. And by the time I get to £1 million, I'm probably going to be invested in much less risky assets, probably just a globally diversified index fund. And that's pretty unlikely to go up 10% in a month. And so putting all these together, that means that the portfolio is generally up £97,749 this month, which is a 78.6% return and takes the grand total to £222,172. Now, because we're 2 weeks into March, I can maybe give you a little sneak peek of what's happening in March so far, and so far it's also looking pretty good. Not as good as February so far, but we've still got 2 weeks to go, so we'll see how it ends up. Now, if you're interested in seeing more of this content, you can hit subscribe to the channel below. You can also view a playlist here, which covers a lot of the previous other updates in case you want to see how the portfolio has evolved and changed in that time. And I'll also leave links below in the description where you can sign up to the newsletter or get your free shares from Trading 212.